Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over, well, I'm on vacation. I'm going to have to go here shortly, but I'd like to get some information in front of everybody. I'm going to do kind of one big market wrap up in all the different sectors, kind of give you my opinion on it. Maybe we try this, new. Maybe I can do this in the future or whatnot. So in the description link below, definitely in the comments section, let me know if you guys like this type of delivery style or not. But this is going to be kind of a big picture view on all the different sectors I cover here. And I'm going to go over, the VIX, dollar, commodities, oil, all that stuff kind of across in one big shot. So let's dive in. I'll give you my financial opinion, and we'll start with the VIX here. So the VIX, yep, we've got some increasing volatility in the markets. And when looking kind of at the overall markets, we're starting to see more selling pressure. So if we were to go to the S&P 500, today it was down a little bit, basically flat. Actually, it rallied quite nicely throughout the day. It was down in the morning, rallied up. Those are bullish engulfings there on these two. And the commodity sector is definitely feeling selling pressure. So when looking at the commodity sectors, we'll first start with the DXY. The DXY is getting bid up. We're at 106.5, up 1.3% for the dollar. And that is heading higher. And when you see higher dollar with a declining 10-year yield, we saw the declining 10-year yield. It's at 2.184. This is going to help the real estate market with declining yields. So we should see lower mortgage rates, which are highly tied to the 10-year yield for the most part. And we're starting to see the housing real estate market rebound. Some of the home building stocks, stuff like that. So if we look at home building stocks, they were heading higher here with some good buying pressure out of the gate here. And this is looking eerily familiar to the 2000s. Early 2000s housing market and just the market in general. We get this sell-off in commodities in the early 2000s. We call it the bear trap. It was kind of like a big bear trap. And now we're starting to see housing start to rally with the lower interest rates. The dollar's getting stronger. The stock market's starting to firm up a little bit. And we're still seeing some selling pressure in commodities across the board. And looking at the CRB index, we're basically flat today in the index looking across. Gold is getting sold off. Gold is selling off. Is this future inflation expectations diminishing? I think so to some degree, and rightfully so, probably in the medium, short to medium term, as interest rates have definitely slowed the rate of loans into the system. And right now, we're basically back within this pattern. We're coming back within the pattern, and that's gold doing basically a full retest. Silver also selling off, coming back lower. Could we hit the 18? I've got about 18, a little over $18 level. There's some good support there. It's probably heading back down there. And then platinum's also selling off. We're getting a bullish hammer candlestick depending on where it ends throughout the day. We're down $22 in platinum, but platinum where it's at is looking quite juicy in terms of valuations in relationship to other assets. And then we're starting to see the mining companies selling off a little bit more today, depending on what they are versus the metals themselves. We have not broken out of this downtrend line for the XAU to gold ratio. We still need to break that. And we haven't broken it yet, and it's going to take some time. It's going to take some time. I don't think that the market conditions are broken, at least not yet. I think they're being delayed for sure, and there's lots of sentiment out there that is negative right now for commodities and just say the markets in general. I'm going to I'll just go over some of the big ETFs. GDX is seeing some selling pressure today. We've got the daily candlesticks. We're continuing to head lower here in this downtrend fashion. We have not broken that downtrend Yet we did see signs of a bullish piercing here, which usually likes to head higher, statistically speaking. But we're getting a sell off today. SILJ, similar. This is a bullish piercing before we gapped lower and then sold lower throughout the day. That isn't a reversal candlestick, but it is obviously selling pressure. Moving over into crude oil getting hit very hard today, down 8%. Big ol' selling pressure day. Now, do the fundamentals justify this pullback? I would say no, it doesn't. But I'll say the fear in the markets and the emotions running deep in the short term is what matters. And right now, that's what's happening. People are fearful. They think that there's going to be demand destruction and all of those sorts. And that's potentially how we're getting this pullback. I mean, explaining short-term price movements is basically impossible to do, even though the news does it, and it doesn't necessarily mean that they're getting it 100% right. But they're attributing causes to these price movements. But the fundamentals, at least here, this is Martin Pelletier. It says OPEC plus output is now more than 2.6 million barrels a day below target. OPEC continues to underproduce and gets worse and worse with time. This is the fundamentals behind the whole market. And the actuality is a sell-off today. Which one's right and how is this all going to work in the end? The fundamentals always win in the end, irrespective of what the sentiment is short term. Long term, they're going to play out. And OPEC's been missing all of their production quotas. And I don't see how oil can stay down low for any length of time as we're releasing from the Strategic Petroleum Reserve, as we are increasing rates, trying to tamper demand, trying to tamper liquidity into the system. I think those are all short-term band-aids or things that are trying to slow down the markets. But right now, we are heading lower, and it is a large momentum day in the short term, so we could see further downside, unfortunately. And natural gas also heading lower. This one is coming similar to or closer to its long-term trend lines, which is around $4.50 to $5. Is probably somewhere in that range, or a little bit below 450 is probably where we're going to hit. So I'm still seeing selling pressure there. XOP, yeah, you know me, getting sold off. We're seeing some strong selling pressure across the oil stocks. And I think that pressure is going to continue until I see some sort of reversal or bottom in it. We do have support coming in around 105. So that's kind of the next support level for XOP, which is below where we are at today. We are getting that kind of pullback. You get a move up and then the last pullback. I do think that we're getting close to some sort of pullback that will end at some point. And then we'll see a reversal, or I should say a strengthening support underneath the stock, some support underneath it, a sideways movement, and then potentially a move higher afterwards. But right now, the selling pressure is on. It's game on for selling pressure. And we're seeing that across the energy service sector as well. We're seeing it in both exploration production and the energy service sector, OIH. We are continuing to head lower, but there is that kind of bounce, and then we complete it heading lower at that point, somewhere down in this general vicinity down here is where I think we'll probably peter out. Coming on down to uranium, UX, this is the uranium futures. If I were to take a weekly look at it, we're still consolidating sideways. It's at $49. We'll see where that updates at. Market is still open at this time. Looking at URNM, still we're getting some selling pressure here. Go to the dailies. A little bit of selling pressure. We had this nice big bullish engulfing last trading session. Doesn't mean that we just go rocketing higher. The bulls could still be in control here. We'll have to see if they show up tomorrow. But right now, selling pressure across the board of all of energy. I'm not going to go into any particular companies. Coming on down the CRB to S&P 500 is going lower. We could see further downside in commodities. In between, basically what I'm saying is there's most likely a lull between the first wave and the next wave. So consider this move here, the first wave, and then we could have a pullback somewhere in the middle here where commodities pull back. That's wave 1 to wave 2, and then wave 2 to wave 3. Going forward will be a much larger wave. So that's what we've got next, is a much larger wave potentially that's coming after we get a pullback. And that pullback I don't think is done yet. Still some selling pressure out there. Another thing to think of, the largest down days usually come during bull markets. The biggest up days are usually occur in bear markets. So these pullbacks can have some pretty large down moves in a bull market. So we're getting our first taste of what a pullback feels like. In commodities, they're quite violent. So this is basically, we've had our pull up here. We might have a pullback, and then we'll see the third leg come, the third wave. But it's gonna wipe people out and try to get you out of this. I'm still holding on. Looking at copper, the copper to gold ratio, we are continuing to head lower. What that means in the short term is that there is fear in this market, this downward movement. Interest rates are also paired up with it, so there's fear in the market. And these pull back with fear in the market. The reason I don't think we're in an 08 type crash or anything like that is that we don't have the houses in the housing market to blow this market apart. So I think what's happening is the interest rates went up. They went up quickly, and they're slowing everything down dramatically. And we're going to see inventories stack back up, but I don't think we're going to see a crash because we don't have the inventory to have the markets crash. So I'm seeing these signals. There's fear in the market. I'm seeing the signals in the market saying, hey, look, the copper to gold ratio is going lower. The interest rates are going lower. That is a sign of fear. It's a sign of money rotating into bonds. It's a sign of money being fearful and selling copper, more so in relationship to gold. And that is fear in the market. And we have pulled back here in those things. And uranium, it looks like uranium's outperforming a lot of stuff, but it still hasn't updated. Looking at the S&P 500's pulled back a little bit, but we're putting it in a hammer candlestick. So we'll see if we get a bounce here. And then the NASDAQ also looks like it's putting in a bullish engulfing, like it wants to go higher and break out of that downtrend line. We'll have to wait and see what happens. Coming on down, the home builder stocks, XHB, have been coming on higher. They're looking a lot more solid, and they've been heading higher here. So perhaps the home builders are starting to get a bid here, tied with lower interest rates. Lumber's been moving sideways, small down day to day in lumber. The fertilizer companies all getting hit today, very much so tied in with commodities. It does look like we could see further downside in fertilizers. Coming on down, aluminum also getting hit. I'm just going to go to the weeklies so we can see it a little bit better. That's been pulling on back here over the past few months. Scrolling down, we've got the Baltic Dry Index, and that sector's been kind of pulling back as well. Starting to see some selling pressure across that entire sector as well, and lots of pullbacks happening in that. We've got some large selling pressure, so we could see some further pullbacks there as well. So commodities in general and precious metals have seen a decent sized pullback here, and money is rotating back into, I think, the general markets. So I think we're going to see a pullback in commodities here between, I think what we did is we completed wave 1 in a big move over the past 2 years. We're going to see a pullback between wave 1 and wave 3 that will come in the future. And then we're going to see a big move in commodities again at some point. We'll monitor it, we'll watch it, and we'll see hopefully that turning point. When will that happen? everybody wants the win. I don't exactly know, and I don't think anyone's going to know that exact moment. But I think when they back off on the interest rates, and when money starts to rotate, I think what's going to happen. Again, this is just me speculating. Interest rates will back off at some point. Then the housing market will kick back up, and then you're going to get more inflation from that aspect of it. So I think it's going to take some time. Yep. And the sphere's got to exit the markets. But oil is still short. And the driver of that inflation, the translation of liquidity in the system into the CPI, which is energy costs, that driver is still there. So right now it's going down, but the fundamentals, the demand-supply imbalances still exist. So that's going to be interesting to see. And they may be doing this for, maybe till October of this year, November of this year. And then once they run out of strategic petroleum reserves, you're going to get this inflationary push again. So that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website, the Platinum membership in the description link below. If you guys want more information on ratio analysis, financial education, cost curves, I also do question and answer sessions. You can see all my old ones in video format. I put a whole bunch of different information on the website as well to teach everybody about all of this. I've got technical analysis training in Elliott Wave and all that other stuff. And right now, yep, it's looking a little bit weak in commodities. I do think that we could have a further pullback just across the board in general. And then at some point, we'll see between wave 1 and wave 3, this wave 2 pullback, we'll see wave 3 come. But it will wipe out all of the retail sector, I think, for the most of it, with whiplashing them back and forth. But if you guys are interested in learning more, definitely subscribe to the website. The Platinum membership is the one that I would choose because it gains you access to everything. And that's where I'm at. So we'll catch you next time. This is Finding Value.